Good afternoon and/or good morning, everyone. Welcome to our webinar, How to Build a Startup Sales Team, presented by Early Growth Financial Services and CloserIQ. This webinar will run for approximately 60 minutes with a presentation followed by a short Q&A, time allowing. For all attendees that do have questions, we encourage you to use the questions pane in the GoToWebinar panel. We will try to get through as many questions as possible towards the end of the presentation and interject with the occasional question when possible. A recording of the webinar will be made available after the presentation is concluded, and it will also be made available on our YouTube channel as well. So without further ado, let's meet today's presenters, starting with Gadiel Morantes, Partner and Chief Revenue Officer at Early Growth Financial Services. Gadiel, welcome aboard.
Hi, Jason, and thank you very much. Hello, everyone. Hope everybody's having a good day. Early Growth Financial Services, we are an outsourced accounting firm based in Silicon Valley, San Francisco. We provide tax return preparation, filing, tax consulting services, 409A evaluation services, and the core business for us is really all the day-to-day transactional accounting on an hourly outsourced basis with a team of senior accountants and CFOs that help support many of our clients and companies. We have locations in not only the San Francisco Bay Area, but LA, New York, Chicago, and Seattle markets as well. So we support companies, even though we have folks on the ground in each of those areas, we can support companies throughout the US. And a big portion of our client base and companies that we work with are early stage and mid-sized companies and quite a few startups and venture-backed businesses. So we support about 15 to 18% of the venture-backed startups in the US and support around 650 active clients throughout the 4 different service lines. So really excited to talk about building out a sales team and the sales function within a startup, as I've kind of taken that role on at Early Growth Financial Services, and really excited to have Jordan on the line as well. So Jordan, why don't you take it away?
Hey everyone, Jordan here from CloserIQ. Thanks for having me on the webinar today. Really quickly about myself and how I got into the industry. My background is actually, I'm a computer science major from MIT, but found himself in running sales and strategy at ZocDoc, a healthcare SaaS company here in New York. And from my firsthand experiences building and scaling a sales team, I saw firsthand the inefficiencies of talent design and recruiting. So CloserIQ is essentially a tech-enabled recruiting service helping startups think through the design challenges of building a sales team and then ultimately helping them staff and make strategic hires. So our book of clients is primarily in New York City with about 120 startups that we work with, and really at 2 extremes. One, at the very early stage, we are thought partners helping the founders, maybe the CRO, VP of sales, think through their first strategic sales hire, what that profile looks like and how that person is going to contribute to the revenue growth of the company. And then on the other hand, we also work with many emerging or growth stage or pre-IPO tech companies where we're really a recruiting partner helping them staff and reach passive candidate pools and really hard to find sales talent. So I'm really excited today to really talk about everything that consists of building a sales team, thinking about the design challenges and how to scale it ultimately for growth.
Awesome. Thank you both gentlemen for joining us today. So to start off, we'll talk a little bit about kind of what we're going through today. It's time to build out your sales team. Congratulations on the growth. So where do you start? We're going to start talking about designing the right team, who to hire. We're going to get into the interviewing process as well as compensation models. We're going to talk about measuring performance and what the metrics look like, and finally a discussion on keeping the team motivated. So to move on from there, we'll get started with designing the right team and what the right structure looks like there. And Gadiel, why don't you start us off?
Yeah, no, this is a great place to start because I think, with a lot of the companies in kind of the startup world, who are your first sales, hires or your first sales, salespeople? And essentially that is the founding team. The founding team a lot of times is out there kind of building out the infrastructure of the company, building out their product and their solution, and really getting out to market and having to do a lot of that heavy lifting on the sales side on their own. And there's a number of founders out there that are fantastic at doing that, and then there's others that really need support and help, which is why hiring the right individuals and building out the team is really key. And figuring out the structure is really an interesting exercise, I think, for a lot of early stage companies, because at the early stages you're looking at maybe you're 5 to 10 employees and you're really starting to carve out, you've raised a little bit of money, and now you're really starting to carve out the different roles within the organization. And so in doing that, the first step a lot of times will be, what talent do you have and what strengths and weaknesses do you have within the current within the current team, and do any of those roles and functions kind of bleed into the sales function? So that's kind of the first area that you're focusing on. Many of the early stage companies we work with, they haven't really gotten to that heavy duty traction yet, and so that's why hiring a salesperson or a sales team is going to be the important next step for them moving forward. And so it's kind of analyzing the existing talent, but then also in what you're analyzing as well is what kind of product and service are we offering? A SaaS business selling into enterprise clients and accounts, are those sales going to be, more on the inside sales, or are you going to have to hire an outside salesperson who's going to be either, physically knocking on doors or building relationships with other key referral partners to really get out there? Or is your product or service something that an inside sales team could help you get some traction and build out? I think it's really important to understand that those two functions can be very, very different depending on the type of business that you have. As having sold for as long as I have, a lot of salespeople, and me included, started out picking up the phone and doing a lot of the inside sales, dialing for dollars, and kind of cutting my teeth on that before really expanding into the outside sales of the true relationship build, the true referral partnerships with other companies, with other individuals that are very like-minded and trying to grow their book of business. So that's a very important component on that. I'll hold right there and just see, Jordan, do you have anything to add to either of those first 2 points?
Yeah, I think those are both very fundamental starting points, is assessing sort of the existing talent you have in place. And I think particularly with existing talent, you have to kind of look at the founding team, because at the early stages particularly, you typically have a couple scenarios. You typically have 2 co-founders or multiple co-founders who've never done sales before, or you may have the instance in which one of the co-founders have formal sales training or sales experience. And that actually, the initial executive design can actually influence a lot your go-to-market strategy on whether or not you need immediate sales hire versus a more junior person to assist. So I think taking kind of account of what you have in place from at the executive level can help you dictate what type of initial hires you need to make. And then I think the other point is also very valid. There's always a trade-off between inside and outside sales, which is predominantly more expensive to run and harder to manage an outside sales team. But many of the household names in SaaS starts out with outside sales to build a brand presence. So you kind of have to weigh and come up with a rubric around the pros and cons of inside, outside, and different kinds of selling strategies.
Yeah, and then compensation structures, we'll talk a little bit about that later, but typically the outside sales hires are going to be more mature, and frankly their comp structure is going to be a little bit higher than an inside sales rep. But they can move the needle quite a bit for you in signing larger deals and building some solid relationships, things of that nature. And so then, that kind of comes into the next couple of points here where, what type of business are you selling? Is it a relationship sell, or is it a pure volume sell? I think that will dictate a lot of how the sales folks and the team is going to be selling into a lot of these businesses. And around building the sales funnel and really kind of putting your goals in place, place for the next couple of months, I think it's really important to take into consideration, how quickly do you expect these people to ramp up? I think that's a challenge a lot of early stage companies have, in that, you're going to hire this person to come in and start selling your business. Do they have a background and experience in selling a product that's similar to yours? Or are you going to be going the route of maybe bringing in a more junior person and helping to train them up a little bit to selling your product? If that's the case, you have to build in kind of those goals for the next 6 months, and then also really realize that it may be taking 6 to 8 weeks for them to really understand what your business is before they initially start gaining some traction. And so be careful on trying to pull away too quickly from a quote unquote new hire that may not be getting the traction that you expect at those early days. But I know it's really, really tough, especially if you're an early stage business that's raised a couple $1 million, and frankly you aren't in a revenue positive state, at least at this early stage. So those are all things that you're kind of considering as you're looking at the talent out there, looking at your existing business, looking at your sales cycle, all those types of things. Jordan?
Yeah. Just to add to that, I guess one of the classic mistakes that we see occur a lot with some of the startups that we work with is thinking too long term with their goal setting in terms of talent strategy. Some examples of that is hiring someone with the mindset that this person is the right hire for the next 2 years, where really for a startup, especially at earlier stages, you have to be very pragmatic about what goals that you want to achieve in the next 6 months. Is it a revenue-driven goal, meaning to get to your next milestone or fundraising milestone, you need to get to a certain MRR? If that's the case, you really need to optimize for a design that can help you achieve that through making very tactical hires who can help you drive revenue, as opposed to leadership or executive hires that's going to help you scale a team. The other thing to really consider at this stage is thinking about where is your business going to be headed longer term. So in the local sales space, you see a lot of products, technology products particularly, that have very low MRR. And ultimately, if you do the math, you know that where you're essentially headed is inside sales. It's just not feasible to build and afford and drive profitability in an outside sales culture. So from day one, in those type of lower MRR situations, you want to be experimenting right away with both inside and outside, because you know that's where it's going. So I guess to summarize that, like, you have to kind of think about both your short-term goals in terms of who you need to hire for what reason, as well as thinking about what experiments or questions do I need to answer today so that the business can evolve into where it needs to be in a couple of years.
I think those are fantastic points, and your point around the team you're hiring and bringing in today may not be ultimately what you have in place a year or 2 years down the road. And I know that from firsthand experience. The first couple of sales hires that I had, were very good opportunities for me to really learn what my sales process and what our organization's sales process and style was going to be at the end of the day. And so that really helped fine tune hires 3, 4, 5, and 6 and go on. So that's I really like that point, Jordan. All right, Jason, I think we can, next slide.
Yeah, real quick, we had a couple questions that came in before we jump out. The first one, just real quick for the uninitiated, MRR, I'm sure you're talking about run rate there, Jordan?
Yeah, I'm referring to a monthly reoccurring revenue. I think for many subscription technology businesses, we sort of think about it as what is sort of the monthly price point. So whether that's a couple $100 product per month on a subscription basis, or is it a annual contract, or is it a service business where the expected value of a salesperson is X amount of dollars. So when I say low MRR, I'm really relatively talking about a salesperson who's doing, something like 8 to 20 deals a month, all at a smaller price point, such that their annual value that they're driving in terms of revenue, top line revenue, is on the order of, 100 to 300,000 or 100 to 400,000. That's what I consider to be more sort of a transactional sale, lower MRR.
Awesome, thank you very much. So let's move on into talking about who to hire. And Jordan, you want to start us off on talking about hiring the right candidates?
Certainly. So I think kind of just going back to my previous point around, you have to start with an understanding of what do you have in stock in terms of executive leadership. So I'll give you two environments. In one case, you have executive co-founding team that really not really that familiar with sales. Maybe they're able to close a couple deals themselves, but a lot of times they're looking to quickly make their first sales hire with the intention or the desire to kind of unload that responsibility. That is a very dangerous scenario. Most co-founders are going to have to be a salesperson for a while, unless they get to a stage where they can really afford a seasoned VP of sales. Another scenario is when you have a co-founder who has done sales before and is very comfortable with it and is comfortable training someone. So you have to look at what part of that bandwidth or that spectrum your executive team is on, and based off of that, you then have to look at the size of your deals and how difficult it is in terms of acquiring the type of talent. So once you get to that point, you're either probably going to be hiring someone who has a lot of experience because you don't have it on the executive team, or you have a lot of experience and confidence in yourself as a co-founder in that you really could take someone a little bit more junior. In general, a startup will go through many phases. The first phase is really about experimentation and laying the groundwork for understanding what does your sales process look like, what type of sales talent profile is really going to be successful in this role, and what is the actual strategy or go-to-market strategy. So in this phase, I generally advise clients to optimize for learning and velocity. And what I mean by that is get as many touches as you can early stage, because you really want to understand, what you can make 2 SDR hires or 2 sort of more entry or mid-level hires that can make a lot of touches, have a lot of client conversations, and 2 is probably better than 1 very expensive VP of sales hire at the early stages, because you'll have better benchmarking because you have 2 people to measure from rather than 1, and they're more likely to be able to do the hard things of staying on top of a sales cycle rather than having a VP of sales who probably may not really want to pick up the phone again and start selling again. So that's generally the phase you're in. But if you get into the mid phase, as you have some initial sales hires and you really want to look to scale, I think then your background and the skill sets you're looking for start to be a little bit more about process and about scale. So the first hires that you want to make for a salesperson is typically going to be with a creative type, the person who can operate with autonomy, who can just go and experiment and figure things out. But that's a very different type of profile than someone later on, once you have your first $1 million of, let's say, revenue, you're looking to build out processes that's going to really scale, and you're going to have to shift their hiring profile as well. So from a hiring profile point of view, it really is very stage dependent and environmentally dependent based on who you already have on the team. So yeah, Gadiel, I'd love to hear your thoughts about this as well, given what you've seen as worked for you and some of your clients at earlier and mid-level stages.
I think that's, those are all fantastic points. And at the early stages, to your point of hiring two folks versus a more mature senior person, a lot of it is, kind of that building that brand recognition out in the marketplace. So to your point is having 2 people out there pounding the pavement, making, basically talking the talk, building relationships, all those types of things. It's kind of fitting almost a dual role of kind of that marketing function as well as a pure sales function. And those folks, I mean, at the end of the day, you really want somebody who's hungry, who believes in the business, believes in the company, and wants to go out there and strive to really engage with a broad audience. And you're exactly right. As you bring in kind of some of these, as the company builds and scales, and you bring in somebody who's been doing it a while, or a true VP of sales or somebody like that, you're also starting to think through what's the infrastructure of the sales team and the sales environment. You're starting to plug in and evaluating systems, CRM systems, other sales tools that you can leverage, things like that, where those folks have experience and knowledge on not only selling the business, but also trying to put an infrastructure in place for something that's going to grow and scale and track down the road. I think those are all different types of components for different stages. I love the point around team fit, because at the early of a company, everybody needs to be really aligned on building the business and getting out there and engaging more and more clients. So one of the things that we've done is really introduce the folks to the team so that we understand, okay, these are the personality traits that we're looking for. This is kind of what we're looking at, and if this person's going to be, overly competitive with their peers, then it may not be a good fit, depending on the structure that the company has. So all those things are really, really important pieces at the early stages. But it's also the route of you plug somebody in and you're really learning from them and learning what fits your model and your business.
All right. Now the hard part, finding the right candidates. Jordan, what are your thoughts on, where founders can start sourcing, the candidates that are going to be the best fit for their organization?
Yeah, so I think as a recruiting partner, we obviously think that eventually a client should be working with CloserIQ, but actually in reality, if you're an early stage startup, I always advise our clients to try it out themselves first, because when you're looking for your first hire or your second hire, the bar is lower for your growth goals, and so you don't necessarily need to bring on recruiting partners at that stage. Also, at that stage, you're probably not going to be exactly sure what you're looking for yet. So trying to do it yourself can give you a good understanding of the market, good understanding of what kind of talent's available, and what kind of profiles you might be able to bring into your organization. So the do-it-yourself approach is pretty simple, and most people are probably already doing it. You can just do some social media blasts within your network, making sure people are aware. I always advise people to just offer some type of referral bonus so that your network is excited and thinking about it. Maybe it's a $500 gift card or maybe a dinner or whatever it is. But offer some kind of incentive for your network to be sharing whatever role or spec you're trying to fill. Job boards are going to be a good partner. However, it really depends on the level and caliber of talent you're looking for. For example, it's probably going to be a complete waste of your time to go look on Indeed and Monster and different kinds of job boards for an enterprise SaaS salesperson. They're just not browsing on there because they're getting 10 LinkedIn emails from recruiters in other companies every day. They're not going to be browsing themselves on there. However, if you're looking for a recent college grad who has a little bit of sales experience and looking to join a startup, that's where you might want to consider, putting a small budget on Indeed or Craigslist or LinkedIn even, and try it that way. And then the third, I think, most difficult but most prosperous and targeted solution of doing yourself is to actually go on LinkedIn and just get a recruiter licensee and just do a lot of heavy outbounding. Come up with a template, identify the companies that you want people from, and just send a whole bunch of cold emails to some of the sales reps that you're looking to target. That would be probably the best way to get started at the lowest cost. And as a startup starts to grow and scale, the growth goal starts to get larger. So rather than hiring one or two, you hire a class of SDRs a month, which is a lot of the cases of some of our clients' needs. They're looking to hire 6 to 10 a month, or they're looking to hire 3 enterprise sales yesterday. In those kind of cases, you're no longer thinking about what's your lowest cost per hire. You're thinking about your average cost per hire. So that's when you start introducing various types of recruiting partners. And the big differences in your options here is really around service model, expertise, and fees. So when you look at, and I'll talk a little bit about the recruiting partners that exist out there, and give you an idea of the pros and cons of each. So traditional agencies are probably going to be your most expensive option. A lot of them do have large databases that were accumulated over decades, and they can be a good partner, but you really have to analyze and look at what kind of specialization, because the more generic, and generally speaking when it comes to partners, the more generic the solution is, the lower likelihood that it's going to help you do a specific thing. So if you're looking for, let's say, an enterprise SaaS salesperson who's done healthcare sales, I would ask the question with the recruiting partner, how many times have you filled this rec before, right? Or what are some clients that you've worked with that is similar to us? To give you a little bit of confidence that they know the space that you're in. So agencies tend to be bigger firms with many recruiters, and you're probably going to get a little bit of various levels of experience depending on the recruiter you're working with and what kind of firm it is. So there's a little bit more variability, and the cost is probably going to be the highest. Independent recruiters, they may be able to be a little bit more flexible in terms of pricing. However, they're going to have much smaller pipeline and much smaller Rolodex. But they can be at the executive search level somewhat helpful if they have a reputation for that kind of niche type of search. And then I think a lot of people are probably pretty familiar with the explosion of HR and recruiting platforms that exist. And to name a few, Hired, Vettery, Planted, Happy, et cetera, et cetera. All of these platforms can be effective as a way of sourcing. Their fees are going to be a little bit lower than the agencies, but they're primarily going to be more of a self-service platform, meaning you're still doing most of the grunt work in terms of courting and trying to bid on people and trying to get people to get excited about working with you. That's what one of the big things that's different between platforms and agencies is the expectations that agencies and recruiters are going to be running a full service as opposed to a self-service. But the platforms can be good if you have, again, sort of a more generic search criteria, nothing specialized. And then I think right now, for out there in the landscape, what makes CloserIQ unique is that we are a truly blended solution, meaning we are the best of agencies, platforms, and we run a full service at the platform level of fee. And what makes us unique is we're super targeted towards sales and revenue generating talent, and particularly in New York City and for technology companies. So it goes back to my first point that I mentioned, which is whenever you're evaluating any kind of solution when it comes to finding the right candidate, you have to look at what do they specialize in, because the more specialized, the more likely that whatever talent liquidity pool they have is relevant to what it is that you're looking for.
And Jordan, typically at what stage are companies engaging with a service, like your service specifically? Do companies typically say, hey, we've gone through a seed round of funding, maybe we've raised $750, $1 million, and now let's go ahead and engage with somebody else?
Yeah, absolutely. I think for us, what we've seen is it's less about the particular fundraising milestone, but really about how important is this hire for them and how difficult are they in finding that right person. So sometimes the difficulty and the urgency is driven by fundraising milestones, and other times it's just about making the right first hire. So we've worked with quite a few very high-profile startups in the last couple of months in which they were probably going to perfectly find a ton of inbound requests from candidates, but because of time and urgency, they want to partner with us because they want us to help them think through. And that's one of the big values you get with a specialized recruiting partner is the actual thought partnership you receive and what is the right hire. So we had a recent client who they just raised a Series A, very well known in the health and wellness space. Founder previously came from a very established media company. I'll stop there in terms of who that could be. But their mandate was to hire a VP of sales originally when they came to us. And when we kind of went through the evaluation with them, we ended up just helping them realize that what they really needed was an enterprise salesperson, given some of the challenges and questions we asked earlier in this presentation. So it's less so about the milestone, it's more about the urgency of growth and how strategic and important is the hire. In general, if you're looking at making a couple hires, recent grads, you're not really sure, you just want to test it out, that's where you probably are better off doing it yourself as opposed to bringing on an agency that's going to be a little bit more bespoke and more of a thought partnership than just a quick solution.
I think that, yeah, those are all fantastic points. And then the other component of it is just leveraging your existing network, right? I mean, I think that's another way of going out there is talking to folks in your network and just say, hey, we're hiring a salesperson. This is what we're looking at. You already know what our business is, or let's explain it, and going about that way. I've had some success there, but yeah, in building out my own team and building out the team, like the do-it-yourself, I mean, it gets really painful really quickly. So that's why, a very attractive solution is a platform like you. And to your point, being hyper-focused and specific, you're not training yourself on each individual company because you know the tech world so well already, so that helps save time and energy from that perspective. So that's all great. Jason, do we have any questions, or should we move on?
Yeah, we can move on. I mean, we've got the right candidates on the hook, so we can get into the actual interviewing process a little bit. And Jordan, I know we've got some various steps here. If you could kind of walk us through this.
Sure. So the high-level paradigm you want to follow is when you're interviewing sales professional, sales talent, any kind of revenue talent, you have to first realize that it's fundamentally different than interviewing product people, engineers, marketers, because it's too easy for people to just say something that they know something. It's much harder to know if that's true or not. So the best way to think about the interview process pertaining to revenue generating talent is have them demonstrate. Don't ask them questions, have them demonstrate their understanding, demonstrate the things that they say that they know. So in general, you want to align your interview processes in a couple ways. One is you want to build momentum in the interview process towards the offer. You want to start with lower asks, meaning in a competitive talent market such as the one we're in right now, don't start out with a 4-hour case study because you're just going to get a ton of drop-off, right? And as an earlier stage startup particularly, most great talent are going to go to the path of least resistance. So if you ask for too much upfront, you're going to lose great candidates. So you want to build the ask by building excitement. So really the interview process is really dual-sided. You want to evaluate the candidate, but you also want to be courting them. You want to be pitching the company the opportunity and making sure that you're not getting a disconnect between the excitement that they have about interviewing with you and working with you ultimately, in turn, and balance that against how much work you're asking to do at each stage. So before you start, the first thing you should do is we're big believers of top grading, in making sure that you start out by defining who's going to do what in the interview process, creating a grading rubric, even if it's super simple at the beginning, because what you do want is your entire team to be aligned on what it is that you're looking for, what does an ideal candidate define to be, and what is everyone going to do at different parts of the interview process. And once you get into it, you start with the initial phone screen. There's been no significant differences in that, and that's always something that I think people should do, because having a phone screen is a great way to have a conversation with someone, and also for a lot of those, for a lot of people out there who are hiring inside sales, phone screen is a great way to see their phone presence. And actually, that's one of the reasons that for CloserIQ, we actually have a feature where our candidates we ask them to record a phone screen almost natively into our web platform that we offer into our clientele, so they can hear how a sales candidate sounds before even deciding to interview them. But even with that, I still advise our clients to still do a phone screen after that, because you do want to see and hear how they're going to position themselves over 30 minutes or 45 minutes on a phone screen. And then the in-person and role play, those are probably a series of maybe 2 or 3 meetings where you're getting them to meet the rest of the team, and then you're putting them in some kind of live action. And role plays generally come in 2 forms. Either you ask them to pitch something that they know best, or you give them the material and the information and ask them to do a pitch of your product or service. And there's pros and cons to those 2 things, but generally what you're looking for here is their ability to, you want to look at their sales process. Do they set an agenda? How do they deal with objections? How do they deal with questions they don't know? How do they organize their next steps? Do they make the ask at the end for the sale? And you want to just get a sense of what they know already, and then also see if you can envision them selling your particular product or service. And at the final end, I think once you get to an offer stage, or you're ready to present an offer, what you want to do then is give them a sell day. You want to have them meet the team, make sure they get, so internally at CloserIQ, when we hire, we typically invite the candidate to come in for a lunch or maybe grab a drink with the team after work, because I want to take them away from the professional environment and see if this is someone that we can really hang with outside of work, which is, I think, so important at the startup stage. And then that way, hopefully, you've given them the complete understanding of what they're getting themselves into, and then that's when you can present the offer, do your reference checks, do everything else that you need to make sure that this is going to be a great person for your organization.
And that team fit and culture fit is hugely important, especially at the early stages, because your first couple of hires on the sales side of the house, they're going to be a very tight-knit group of folks, because they're going to need to share stories, success stories, challenges. They're going to have kind of that support group built in. And it is a high pressure environment, especially working at an early stage company and startup, because a lot of times the business is dependent on growing and scaling on the backs of these individuals. So you need to make sure that from that perspective, this individual can live up to their sales metrics and be okay under pressure, and to continue to go out there and perform as they need to. But building in that kind of that infrastructure in place is really, really important. And then Jordan, typically for early stage companies, how long does this whole process take? I mean, are we talking identifying a candidate to actually getting somebody on board, or even getting just to the negotiation stage? Talking depending on individual, like, I mean, it can be months potentially, right?
Yeah, absolutely. That's a great question. I think in general, there's a couple of dimensions that you need to factor in. One is how how important or how strategic is this hire? If you're hiring one person, they're going to be strategic sales, and it's a long sales cycle, you really need to spend a little bit more time to get to know them. And second of all, it is really about like how much competition are you facing for this type of particular candidate, right? If you're looking for recent college grads to pound the phones for you, if you try to drag it out for 6 weeks, you're going to lose that candidate somewhere else because they're making decisions within probably 2-3 weeks. However, if you're courting a passive candidate who's worked at his or her current company for about 4 years, and you're trying to bring them on as a strategic salesperson as the first hire, and you're giving them a significant equity options package, you can spend maybe 4 to 5 weeks to really get to know them. But ultimately, I think the fastest that we think companies can reasonably move and do all the diligence is probably about 10 to 14 days. And but in some cases, I think probably the median is more like 3 to 4 weeks for mid-market enterprise sales. Any kind of more strategic hire or bigger ticket hire is going to be on that order. And then for VP of sales or CRO searches that we've done, those can take more like 2-3 months is what I would want to budget for, because at that level, you really want to see enough candidates across all kinds of profiles so that you can make a very educated, informed decision about whether this is the right type of sales leader to bring into your organization.
Now, for the steps like 2, 3, and 4, the phone screen, in-person interview, the role play, for any or all of those, does it make sense, or have you seen, or would you recommend someone actually doing like a video call rather than something in person if it had to be that way, like if you're hiring someone remote?
Yeah, Gadiel, what's been your experience on this? I'd be curious to kind of hear, if you guys have done this yourself, if you've seen some of your clients have employed this technique.
Yeah, I mean, I've actually employed it myself, doing the video call and actually hiring remotely. But what comes into that, I mean, part of it, to your point, on the initial phone screen and everything, you want to understand and get a feeling of, what type of presence do they have? Are they good at communicating? Will they be able to be dynamic enough over the phone? I think, it's also understanding your process too. If you're hiring inside sales, that's a huge component. But to give you our example, we do a lot of our initial prospect calls on a phone as a quick half-hour conversation, and so the phone piece of it is very, very important. And then video calls, it's more about getting to know their mannerisms, getting to know how comfortable they are. Like, I think for me, I mean, recently hiring a couple of folks remotely, that's where do you jump on a plane and get out there, or are you okay with hiring a person? I will say, and Jordan, by all means chime in, I do think it's a little bit riskier than doing in-person interviews. Not even a little bit. It can be quite a bit riskier. So what I did on my end was, first off, these folks came in from very well-trusted sources and also understand my business, understand how our sales process looks. And so a lot of it was taking kind of their relationships and my relationships, and kind of that vouching process played a huge, huge role. But it's risky. It's definitely risky.
Yeah, I 100% agree. I think the video chats and the video tools has two implications. From a candidate's point of view, it's a lot more work and a bigger ask, especially if the candidate is currently employed. It's much easier for them to step out of the office and take a 30-minute call than for them to have to scramble to find a Starbucks and get in front of there and look good, and a lot of times they wear a suit to work. People are going to be like, well, what's going on, right? So from that consideration, the video is a much more difficult ask of the candidate, and in a competitive market like the one we're in, those kinds of asks can certainly decrease your conversion rates at the top of the funnel. But I do think, though, if you are evaluating outside sales talent, if you're trying to remotely hire for another part of the country and you're trying to build some rapport with the individual, then the video ask could be a nice way to suggest it. But I would also offer the alternative if they really cannot do that and just do a normal phone screen.
And I'll add one other point from experience from a job several years ago, is that if you are planning on doing a video call instead of a traditional phone screen, make it very clear that it is an actual video call. Had the employer call me directly and then wonder why my webcam wasn't on when they had not asked me at any point to set up any kind of video conferencing. So so that you don't end up looking like a ding dong, make sure that you communicate that clearly if you're going with the video conferencing route versus a traditional phone screen.
And you have to scramble for a shirt and comb your hair, right, Jason?
Yeah, you got to run out for that quick haircut. So some great stuff on the interview process. So another big topic here, of course, is compensation. So with the sales team specifically, it's a little different than just straight up salary most of the time. Gadiel, why don't you talk about kind of how this lays out from your perspective?
Absolutely. This is such a huge component, and it's really, I think, at the early stages, a lot of startup companies and organizations really struggle on figuring out what the appropriate compensation plans should be at the end of the day, because you're still, frankly, a lot of early stage companies are still trying to figure out what their pricing structure is, and how they're going to market from that perspective. So they are looking at and iterating on a bunch of different types of revenue plans and structures, which will directly impact salary, commission, or both. And so this is a topic that can be really important in terms of, as you're bringing these folks in, if this is truly your first sales hire and you really have not had any sales prior to this, this is an area that can get really tricky really quickly, because from the candidate's perspective, today your sales commission plan today may switch in 6 months or a year, depending on what that business is doing and if they've taken a pivot or if their revenue has switched or changed. So one of the things that, not to toot our own horn, but early growth, our CFOs are very good at, is not only building a financial model for the business and understanding, hey, I'm going out to raise a seed round of funding or an A round of funding. I need to understand kind of what my 3 to 5 year plan is from an overall business standpoint, and what I'm carving out for different departments in terms of paying them on that end. But there's also a huge component of that where we can do a deep dive on trying to help build out what the key metrics and commissions and money will be that you're going to be dedicating to the sales function and the sales organization. And some of the things that we'll have to take into consideration as you're kind of building out these sales commission plans and modeling these out, and these are things that the CFOs really take into consideration in doing what product are you selling? Do you understand and realize what your profit margins will be? What is the actual cost of the sale? And then from there you start developing an idea of, okay, if I have a base plan where let's say I'm paying the person $70,000, and then I'm going to give them 10% commission on every closed deal for the next period of 1, 2, 3 years, whatever that may be. I mean, all that needs to be modeled out, because you want to understand how soon is my individual sales rep and sales hire going to get to profitability themselves, so that I'm not just paying them a salary and breaking even on them, but I'm actually, as an organization, making money on the sale that they're doing. So I think that's an important component of really understanding, what those incentive formulas are going to be, what are the different features in the sales plan, a compensation plan, what are those going to look like? And it probably will be a balance of base plus commission, because every salesperson wants to make a lot of money and more money, and their plan is almost around the upside of, the more I sell, the more commission I get. And then at early stage companies, a lot of what we'll see, I won't necessarily see it at the very early stages, but I'll start seeing it right around that VP of sales person getting plugged in, or a very experienced salesperson is, do I carve out a slice of equity, or can they earn a slice of equity and invest that over the next 3 to 4 years as that added incentive? Because as an experienced salesperson, you may be leaving a much higher paying job for this opportunity at a startup, but that has quite a big opportunity to grow and scale. But there is that risk, and you are taking that risk to really understand it from that standpoint. So, this is an exercise that really will depend on what type of business or service that you're offering to your clients, and breaking it down to the different functions of what's a base salary we can afford, that we feel comfortable with, but that's not so high that a salesperson is going to be just okay having that base, but they're going to have that upside on the commission side. And then do we introduce a slice of equity as well from that perspective? So those are the things that we would do in modeling out those scenarios from that standpoint. But it's really, it can be a moving target, and it's also going to depend on the type of candidate you're looking to bring in. And Jordan, I'm sure you spend a lot of time on this as well, having to negotiate probably on behalf of your clients and potential sales hires as well.
Yeah, absolutely. I think it is definitely very important to realize that this subject matter in particular is extremely complex and very unique to the special circumstances of every company and every candidate. We've tried to capture this in a couple white papers, but I guess the biggest framework I can offer is that think about base, commission, and equity as very fungible three levers. And of course, there are other mini levers that they can negotiate, but these are really, for all intents and purposes, the three main levers of economics for a salesperson. The base really is really dictated by the market. And what I mean by that is, like if you look at New York in terms of hiring a recent grad or an enterprise salesperson, there's going to be general bands of where the base compensation are. And a lot of times what we're doing with clients is helping them understand the implications of offering let's say a $40,000 base with let's say $40,000 base with a $60,000 on target earnings. And what would that look like if you were to move the base up to a 45 or 47.5? Because oftentimes you can keep your cost of sale the same and tweak the base. That's much better talent. As you get into more senior hires, the base becomes a much smaller percentage of overall compensation, and therefore, increasing base has less multiplier effects. But for an entry-level person, if you imagine you just moved to New York and just graduated college, a difference between $35,000 and $40,000 is huge, regardless of whether if your on-target earnings is going to be $45,000. So a lot of times, it's about thinking about the unique individual you're trying to attract, and mixing in their priorities in terms of how they think about the three components, and of course factoring in your priorities as a company. If you have, and I think most startups are going to be cash is king, so of course we'd love for them to have lower base or no base, but in reality what you end up getting is some very adverse selection problems where you get people who are so desperate they're willing to work for no base. That's probably a bad sign. So you do have to think about your cost of sale overall. And that really starts with, what do we think this person can generate in a total year, and then working out like what percentage of cost of sale are we comfortable with, and then working through the math of, well, what percentage of that are we going to have in base and commission. And equity, I think, is always, it's kind of a lesser of a problem or a lesser of a topic when it comes to sales versus engineering, and it really particularly doesn't really matter that much until you get into the more leadership hires within the sales org. So that's sort of where we generally net out, but I think some of the other components here on the slide I think is very important to mention is plans are constantly going to be changing. Just internally at CloserIQ, we probably changed our comp plan 3 times in the last year. And one of the big things you can do is making sure you set the right expectations with your hires up front about the experimental nature of compensation plans for sales hires at a startup. And you want to start out with very simple models, even if it's a little bit rudimentary and not maybe incorporating all the different kind of behavioral incentives you're trying to hit, but you want to make it simple so that people can understand and give people a good band of expectation on what is it to mean for a stretch goal, what does it mean for a conservative goal, and show them a cone of what their earnings could be. And that will set you up for success in the long term, as if you get it wrong and you're overly trying to be precise, you'll have to deal with talent retention problems, which is going to be a complete nightmare for you.
And quick question on that end, Jordan. I know, especially with early stage companies, in switching up the kind of the sales compensation plans and all that, I mean, it's always a challenge and hard. I think that's where, working at an early stage startup, it's really communicating to those folks like, listen, we're still figuring some stuff out. We're still growing and scaling, but we will also want to make sure that you get taken care of, but but that the company continues to grow and scale. Did you find those as being relatively easy changes to make, or pretty hard?
Very difficult, and I think that that's going to be true in any case because it's only human nature to adjust to changes in a very sort of shock type of way. And I think that some of the things I would say is don't shortcut yourself on best practices and change management. If you have 3 salespeople and you're about to change their commission plans, the first time they hear it should not be in a group meeting with you. You should talk to them individually. You should get feedback. You should incorporate their thinking and their opinion into these changes. You need to get buy-in. It's not that people are opposed to their comp plan changing, but they need to understand why it's changing. Even if it means the logic could be like, look, the commission plan we came up with is absolutely not scalable. We're just going to drive ourselves into the ground as a business, and therefore we're making this change, and I'm showing you the math and the logic as to why it's happening. You're a partner here. You're an early hire, and I want you to be a thought partner with me. Do you agree that these are necessary? And find ways to kind of help deal and cushion the blow with maybe some other alternative ways to making it more attractive overall. So maybe you're decreasing the commission plan, but you're increasing base slightly, or vice versa. And those are some of the ways that can kind of help you navigate some of these very tricky scenarios. But ultimately, you also have to hire the right people, kind of going back to earlier slides. You have to hire people at the early stages that really have the mindset of being an entrepreneur and being part of the story of the company and not just working for a paycheck. If they're overly attentive on the sales plan, you're probably going to lose them in some of these substantial changes on the commission process, which is inevitable.
All right, great. Awesome insight. Thank you both. So we've got the team on board. We've got the package negotiated. So we need to talk about actually measuring the performance once we've got them on board and up and running. So Jordan, can you tell us a little bit about what metrics matter?
I think, again, similar to compensation plans, sales metrics, sales analytics is very, very specific to the company, to the sales process, to the revenue goals, to the role. And in general, what you want to do is start with your, I call it level 1 KPIs, your first level, the one, and you should really only be tracking, a handful of these at most to really understand how your revenue is being generated. And then I think as you go into the metrics, you want to start measuring more and more specific, but the whole time you want to make sure that you're checking these metrics back against your business objectives and making sure that it's a pure measurement or the measurement is correct. So for example, one of the common questions that people may ask is, how do I compensate a sales development representative, someone who is, in our neck of the woods is charged with the responsibility of setting qualified meetings for their account executives or for a closer? And that's a classic question because there's a whole bunch of metrics you could be performance on. You could be basing your assessment of their performance based off just the absolute number of meetings they're setting. But of course, there's some dangers to that because not all meetings are equal. What does it mean for a qualified meeting? What does it mean for a high quality versus a low quality meeting? Those are variances. So that singular measure is only going to tell part of the story, and that's when you need to add some L2 metrics or L3 metrics like, what is the total pipeline value that they're creating, or what's the conversion rate of their meetings into closed deals, or what is their ultimate sort of leverage in terms of value added to the pipeline as an independent meeting setter versus not having them. So what it all comes down to is having some really good metrics that start from the top line revenue goals, and then measuring and refining and evolving those metrics as you start to understand the fallacy of your metrics. Does your metric actually measure the thing you think it measures? That is a question you should be asking yourself constantly. And another way of thinking about it is, how do I know this metric is good? So if you get a 45% conversion rate, how do you know that's good? Well, there's a couple ways to compare that. You can compare it against historicals, which most startups don't have, unfortunately. You can compare it by hiring another person, so you have 2 people to compare it against. Or you can compare it against industry or competitors, or doing your research, grabbing coffees with people and saying, hey, what are you guys converting? But you need to have some kind of benchmark, because otherwise these metrics are going to be pretty meaningless in its own. And of course, the best thing to do with all these metrics is to constantly measure them and get in the habit of having weekly meetings where you evaluate every KPI and look at the trends and the differences and the changes and really try to understand what is driving those changes in metrics. And I think if you can get to that kind of level of precision, you've set up yourself a nice machine that can evolve your metrics for the better over the longer term.
Yeah, and I think it's very dependent on the type of business you have and what's going to lead to a closed deal, right? So, the sales, the key metrics that you're tracking no matter what every time should always be, the average size of the sale. What's your sales cycle time? These are going to be indicators of future performance, and also, as you build out your sales team, what does the conversion rate look like of as you bring in companies and prospects into your funnel? What does that conversion rate look like, and how is that going to dictate future folks? If you're a business like ours that's very, referral dependent in that we get introduced to many of our clients versus outbound, just cold generating of leads, that conversion rate tends to be higher. So, what's that barometer going to be that you're going to, as you bring in additional folks, you're saying, okay, well, we typically convert 60% of the deals that we face. That's an important number, because if you have somebody converting at 40%, but realizing that your baseline has always been 60 because of the function of how you get in front of potential opportunities, and then that obviously ties into what they call the leakage, right, or the lost opportunities, or those opportunities that hang out on your pipeline for very long periods of time. Like, at what point do you just write those off and know that you're not going to close those deals? So, and what's nice is that these metrics will iterate over time, but it's all about collecting as much data as you can from the very early stages. And you're doing that through CRM systems and other tools that will help you kind of collect that data, so you can replicate it or pull it out and really fine tune it down the road. And those are all areas that you start plugging into, kind of the financial model for the business, and really analyzing what you've got moving forward. Just a few added points.
Great. So with the metrics in place and you've got the team humming, Gadiel, how do you keep them motivated? The startup world can be very much up and down. So you got some key points for us there as far as keeping everybody going?
Yeah, this is a tough one. I mean, I think, ingrained in a good salesperson is a self-motivating factor. They want to succeed, they want to grow, they want to scale, they want to, be motivated by the function of potentially having more money in their pocket. So that's a big component. Is a lot of sales teams and sales folks are very self-driven, which is fantastic. But even with them, working at a startup a lot of times can be frustrating. There is a lot of change. There is a lot of shifting going on. And if that directly affects the salesperson, then yes, that can really hurt them on the motivation front and staying engaged with kind of what their role is. But others, things that you can do as you're kind of really looking at these potential new hires and building out your team is, are there opportunities within the organization that you can tee them up on potentially growing within the organization? Maybe if they are your first couple of sales hires, there is that path to potentially growing a team beneath them, or helping to mentor other folks as they come in the door. Giving them tools and opportunities to really grow as sales professionals is huge as well. So, for instance, with early growth, we've brought on a couple of folks that are newer to the sales world and newer to the sales environment, but we've given them and tried to help coach them along and give them tools that they can take on for the rest of their careers on, whether it's public speaking or whether it's being thought leaders in the ecosystem, building relationships that are great relationships for the current role, but then these are also relationships that can help them grow and scale as individuals moving forward as well. Those are all things that can really help around the motivation piece, or even dangling carrots like, hey, you've been on board with us for a year, we're going to give you a little slice of equity as a potential, you're now invested in this business as much as we are, not just here to collect a paycheck. All of those are kind of areas that you can look at to help motivating the team. Jordan?
Yeah, I love that. Yeah, those are some really great ideas there, and I think in working with countless sort of sales professionals, one thing we have recognized is that everybody is motivated by different things. And one of the things a great manager does on day one is understanding what the motivation is for an individual and then really designing a motivational plan around that individual. So one of the things that we like to do is when a new hire starts is ask them to write down 3 things that they want to learn or want to like explore or gain experience on within the organization, and as a means to start to understand what are some of their developmental goals within the role. And then within that, I think for most startups, I would say 90% of people you're hiring are the primary motivation is actually not money. I like to use the analogy of a car. You know, your compensation plan and your earnings potential at a startup is really the engine that keeps the car going, but you can't ignore the interior. You can't ignore what the seats feel like, what the dashboard looks like, and how the steering wheel feels. And that is analogous to the way that your environmental is set up. What is the recognition system? How do people get recognition for hard work? What does your leaderboard look like? Are people interested in is there a way, a mechanism for your hire, for when someone closes a big deal, for everyone on the team to know about that and to celebrate that success? What is the vision that the head of sales sets on a regular basis? Do your sales team and sales members know why should they be grinding it out day after day? What is the vision of where they're going month over month? And I think it's really important to not ignore those other aspects of motivation beyond the sales compensation plan. And when you can put it all together, that's the experience that you're providing a new hire and able to retain them through good times and bad times. So I think it is really important to one, uniquely tailor it for each individual, and 2, keep in mind that it's much more than just about compensation.
Okay, great. Thank you both again. We've actually hit the end of our presentation here, and we've got a couple of good actually several good questions that have come in. I think we've got time for 1, maybe 2, as we squeeze everything into the hour there. So I'm going to try to paraphrase this one question here and see if I can get insight from both of you. For a founding team that has no sales experience, we're thinking about hiring a director level person who can help with strategic direction. Do you guys think that's a better way to start for companies in that position, or does it still make sense to seriously consider something along the more junior level salesperson?
I think that there's probably, it really is circumstantial because, but in general, I would start with this. Sales is not hard. If you're a co-founder that's never done sales before, your whole team has never done sales before, don't get discouraged by that. Like my background is a good example. Like I was studying computer science at MIT, and now I'm a sales guy, right? You can make these switches. Technical co-founders are able to sell. So don't hire a person just because you have apprehension around confidence on selling. The director level hire has to have some very specific strategic goals. And if you're going to make that hire, you need to understand what it is that makes you want to hire a director versus an individual contributor or a person that really can just hit the ground running. And you also have to question how much logos and brands you already have, because if you bring an individual with no logo, no brands, that might be typical. So maybe that's where the director of sales could help in terms of some partnerships and some relationships. You also have to look at your revenue and what your goals are in the next 6 months. If it is to increase in your MRR or your monthly run rate, I would look at what is the cost difference between a junior hire and director of sales. Can you get a 2-for-1, right? And those are some of the questions I would ask to kind of get to the next level of understanding on whether or not you should hire that director right from the beginning.
I completely agree with you, Jordan, and I also think that if you are at that stage, I think talking to your advisors, talking to your investors, talking to folks like that, a lot of times they can help you get and close some of those early deals so that you have a little bit of traction, that you get some moving forward, and then if that gives you a little bit of a good head start, then plugging in somebody that can be a little bit greener and maybe a little bit more affordable will end up working. But I think that's where you rely on your advising team as well.
All right, one more quick question, again paraphrasing, but for a company that hasn't had a sales function in the past and is hiring their first salesperson, fleshing out a sales funnel, is there a typical way of doing that, or is that also does that vary from company to situation, and what does that look like?
Just to jump in, yes, it is very specific to the different industry and business and kind of what you've got going on. So if you have had any type of sales, I mean, you have built a sales funnel, and where are your deals coming from? Where are your opportunities coming from? Or what type of businesses and clients are you trying to target? Because that's going to really dictate how you build out where you're getting those opportunities from.
Yeah, absolutely. And I think one exercise that might be helpful to kind of force you to develop that funnel pretty quickly is, I think a great exercise to do is to start from the notion of how do I forecast my revenue? Because when you try to do that exercise, it starts asking the question of what are the levers or what are the stages or pieces in the funnel that actually influences or impacts revenue. So you could start with a very simple mathematical model by mapping out your sales stages and assigning probability and then assigning sort of some kind of expected value notion and to build out a forecasting measure. And then what you obviously want to do is making sure that your forecasts and your and the target objective function is correlated and is right type of level. That would be a good way to start. And I think that a lot of startups tend to ignore is marketing. And marketing is something you want to start very early because it takes a long time to build without going straight on the paid side. So sales and marketing are really connected. So you want to start thinking about where am I going to get my leads? How do I think that the leads and the progression of these leads into sales and into ultimately closing? How do I forecast this number? And if you work back from that strategic goal, it'll force you to come up with your sales funnel and be able to, in months, you'll start be looking at more second order and third order type of measurements on what that funnel looks like.
Okay, great. I think that's all we've got time for today. So thank you everyone for attending. Gadiel and Jordan, thank you both for joining us and providing some valuable insight. As a reminder, this recording will be made available both on our YouTube channel and then via email within 48 hours of the close of the webinar. So gentlemen, thank you again, and to everyone else, have a great rest of the week.
Thank you.
Thank you.